So we now do the solution for problem 2. We've already discussed the problem and all the schedules, the items that go under different schedules in the previous video, and now we are going to post all those items accordingly under the different schedules. So like we have done before, I've split the screen and here we have the question and here we have the solution that we will be doing simultaneously as we read out each of those items. So let's prepare. This is the format of the profit and loss that I've already drafted out, prepared the outline. This remains the same. Interest on other income, these schedules, what comes under here remains the same. Appropriations might differ slightly depending on whether dividend is given, not given, what type of reserves are there, and so on. And then you have the notes. Of course, the notes will also differ depending upon again what type of income and expenditure is provided to you in that particular problem. Okay, so let's get started here and we will see what items go into each one of these schedules and accordingly get the totals for each of the schedules. So let's see. First we have interest and discount earned, right? So we'll put it here, interest and discount earned. The amount is 3,800. We don't have the previous year's column, so we'll leave it at that. We have 3,800. We'll do the totals once we have entered all or posted all of those items under different categories. Next, commission and exchange, we have 195. So that amount is 195 here. Alright, so commission exchange income. Interest paid goes to schedule 15, that is interest expended. So interest paid amount is 2,000 and that will show here 2,000, right? Next, salaries and wages, directors fees, rent, taxes, postage, telegrams. All 4 items go under your operating expenses. I've already added them here. We will write the amounts now. So salaries and wages is 210. Then you have directors fees which is 35. You have rent and taxes which is 70 and postage and telegram which is 61. Next, profit on sale of investments, we said we would put it here under your other income. Now since we also have loss on sale of investments, I would like to just write it in the inner column over here itself, that is profit on sale of investments. Amount is 240 and if you minus the loss on sale of investments, the amount is 38. So if you deduct these two, if you minus these two, what you'll get outside in the outer column is 202, right? So 202 is the total profit or the net profit on the sale of investments. Now what else do we have here? In case of, let's see, rent received, the next item is rent received, which also comes here under other incomes. So rent received amount is 62, right? Next is depreciation, stationery, auditor fees. Again over here, depreciation amount is 31, stationery is 60 and auditor's fees is 8. Alright, so basic posting of all the items is done, right, that are given in the particulars over here. These all of these other items will be dealt with in the working notes, right? They don't directly come anywhere in the profit and loss account. Like they are not expenses, they are not incomes. Most of these are provisions that are to be made or balances that have been brought forward. So our schedules are done. Let's total up and we get what are the totals of all of these, each one of these items. So first one 3,800, since there is no other item to be added. Same way we keep transferring it, interest earned over here 3,800. Next, other income 195, 202 plus 62, we get 459. Let's total transfer the total there, 459. Okay, next, these totals will come back to later. We'll just transfer the amounts as we get them here. Interest paid next schedule is 2000, same amount, let's transfer here. Interest expended total is 2000 under schedule 15. Then interest schedule 16, operating expenses, total of all of these is 475, and operating expenses that we put up in the profit and loss is also 475. We transfer those amounts there. Now schedules are done, all the major items have come in our profit and loss account, interest, the expenditure and the income is there. Next we need to calculate provisions and contingencies, and we need to calculate what will be the profit before tax after including all of these provisions, and of course after minusing the profit after minusing the income tax, what will be the profit after tax. All right, so accordingly we will make those calculations in our working notes and we will arrive at the different figures related to all those provisions and contingencies. Okay, so let's see what provisions we are supposed to make in this particular problem. First, let's take the total income. We already have the total income because nothing else remains to be added. So total income 3,800 plus 459 would be 4,259. Okay, so one total we already have. In case of expenditure, we cannot total this up yet because we don't have provisions and contingencies, but the amounts that we have, the two amounts, we can always use them to calculate our profit before taxes. So total expenditure, that is interest plus operating expenses, is 2,475, right? So 2,475, and total income calculated here 4,259. Okay, now we cannot call this profit before tax as yet because we have another provision that needs to be minused before we arrived at that figure. Okay, so after minusing these two, we will also be minusing a provision so that we calculate what is the provision on those doubtful debts, and only after we minus the provision we will get what we have is the profit before tax. So we write here provision for doubtful debts. So in the problem, in the adjustments given to us, as we have seen, the loan of 5,68,000, which is become a doubtful debt, and only 50% of that can be recovered, right? So we will calculate 50% of this 5,68,000. All of these amounts, since they are in thousands, we deduct this, all these zeros will be gone, and only 568 will be considered. So a provision for doubtful debts will be 50% of the 568, which comes to 284, and once deducted from all of these amounts, the profit before tax that we get is 1,500. In the next thing, we will calculate the rest of the income tax as well as all the other reserves that are to be calculated.